Hey there, this is Justin Amato with NakedTrader.com again. I'm going to cover some daily signals. Today's Tuesday, May 18th, 2010. And you're looking at an E-mini S&P daily only, pit only, I should say, daily interval chart. So that's from 8:30 a.m. to 3:15 p.m. Central Time. So we'll get right into these signals. The first signal here was back on April 21st that I want to look at. I'm just kind of hovering around it with my cursor here. And the close of this bar or this day was 12 even half. The signals generate to the signal boxes at the close or after the close of the market. So what you're looking for, and the intricacies state this in the power signal section of the site, is that you want to stay in these signal trades anywhere between 1 and 4 days after the signal. So anytime in that time frame, you can liquidate for a winner, a loser, or a scratch. And the loser would probably be if you get stopped out. So there's definitely some intricacies that you can read through as to how to utilize these. There's also PowerPoint demonstration slideshows that also map out a detailed way of how to utilize these daily signals as well. So anyway, the 12 even half price point you would be into this signal for. Within the 24-hour time frame, you saw at least a 14-point break down to 1186 with a low. So I'm sure at some point during that slide, that shift downward, you were going to liquidate a few of your contracts. We always recommend with the dailies that you do trade more than one lot so you can scale out of winners. And then, of course, adjust your trailing protective stops down as well. So this second the reason why we also like this for a short-term play was that we got a sell signal combined with a candlestick pattern called a switching line. That's a minor trend change indicator. We're looking for a minor downturn before we again head higher. So that's indeed what occurred. Now, if this second signal here is still within the 1 to 4 time frame, 1 to 4 day time frame. It occurred on the third day after this first signal. The date here is April 26th. The close of the bar is 12:16 half. I'm sorry. The close of the bar is 12:08 quarter. The high of the bar is 12:16 half. So what you have here is a dark cloud cover candlestick pattern at a lofty price area. You know, the other daily technical overlays we use, we're also suggesting to be short up here. So we get the candlestick pattern, we get the sell signal, and you know, we don't recommend adding to the position if you're already still short from 12 even from 12 even area off of this signal. But I guess if you did take a couple off, you can always put a couple of them back on at better prices. However, I'll get right back to how the market reacted here. We did have a nice, about a 30-point move to the downside the next day. That's a huge move. Most likely into the open of that day, you're already looking to liquidate a few contracts. The open was 12:01, so you already have a 7-point lead on your short position from this closing price on the April 26th. So the low of that move on April 27th was 1177.50 or 1177 half. So when you see a day like that, the suggestion is to liquidate 75% of the trade. It's solely up to you whether you want, and your risk parameters, to run these signals beyond the 4-day time period. So if you were still in, still just short from the 12 even area, the fourth day the signal came right, and it came right huge. So but again, if you were just short from this 12:08 and a quarter, or maybe you were average between the two at 12:04, you're still looking to liquidate 75% of the trade once this fourth day occurs. Now, after these two signals had occurred and we got this move down and then a little bounce, we started to realize that we could have a head and shoulders top here forming. A small one, but nonetheless very important, a very important reversal pattern. So you have the left shoulder, the head, and then the right shoulder. We draw on the neckline. We knew before this even occurred where the trigger prices would be, somewhere in the low 1170s, and then the objective would be a trade down to and near 1140, or maybe a smidgen underneath 1140. Obviously, that fat finger, supposedly quote unquote fat finger trade that went through occurred, and we sliced right through it. But nonetheless, the direction was correct. The direction of the market was lower off of these sell signals, off of the bearish reversal pattern that we got. So when we returned higher to the neckline to test some resistance, this was May 13th. Across the site and webcasts, our technicians were all looking at we were very cautious at this rally back and looking to be short against the 1170s. And of course, this neckline here, the retest of the neckline, came in around the mid 70s. So the high here was 1172 for May 13th. What we also like in conjunction with the daily sell signal last week on Thursday was that we got a candlestick pattern called a switching line. After a rally, seeing a switching line, just like this one back here, we do like a minor trend change indicator. Being that the moves are a little more exacerbated than they were back here, we saw a great shift to the downside on Friday. Again, your downside targets you would have looked back, you would have dropped in some fibs maybe, but there's a gap here that occurred from a firm open, and that gap is from 1144 to 1132. Open and closes of gaps of this size are always support and resistance. So maybe you would have been short from, let's see, the close was 1156.75 on May 13th. So if you were short from there, the next day you come in, we're already down a full 10 points. It opened at 1146 half. And maybe you're taking a couple contracts off at the open of the gap at 1146 or 1144, and then you're taking the balance off when we close at 1132. That's a great trade right there. That's 10 to 25 point move to the downside with absolutely no heat taken. The second day we actually plunged further with lows at 1112. So you can see where these NakedTrader PowerSignals have recently come in real handy while trading the spoos, and it's obviously works for correlation as you could have been getting along the Treasury market as the back end curve market has lifted well off the sell signal. So anyway, that's just another good example from a couple good examples from NakedTrader's PowerSignals. Hope you can utilize these in any aspect possible and take our 2-week free trial. Good luck and thanks again.